Okay, welcome penny stock billionaires to special episode. We're going to be talking about charts. We're going to be focusing on two stocks, which really right now are incredibly set up for 10x plus upside. I want to say 10x to 100x, but let's just say 10x should be within. I mean, they're really on the path, on the runway to that 10-bagger status within, I would say, 6 months. It's like the roadmap is clear. It's kind of like that thumbnail you see in this video with the Ferrari on that coastal highway. This is going, I mean, it's just going to go straight down that highway to 10-bagger, which means I think that ESC, $12, easily attainable in the next 6 to 9 months. That's $12 Canadian, $10 US. So it's a 10x from here. I think OG is a 5x, $5 easily in sight, 6 to 9 months. Okay, so I'll explain to you how this is going to happen. I'm going to start off with Organic Garage right now. Let's first get a picture here of the chart. I'm showing you the candlestick chart. I know some people like candlesticks. I'm not really a fan, but I like the concept of it. Okay, so as you can see, big green candle update today. It's above the moving average. Notice how the stock has bounced off that 50-day moving average. It's been very strong, and that indicator has been very accurate. You know, when it first broke out of the moving average, big uptrend from, I don't know, 10 cents or something to almost $1. When it broke down from the moving average, you can see the downtrend from 75 cents to 30 cents, and now it broke out of that. And okay, so here we go. So let me go back to the regular open, high, low, close bar chart, which I kind of prefer better myself. Okay, so today is really this is really a key day today. This is really a kind of a breakout day. And again, you got to keep in mind the market was very rough today. I think NASDAQ, Dow looks like they're going to just completely collapse. But OG and ESC are looking very good. Okay, so here we are. The stock is, let's call it 50 cents right now, 49 cents. We get a really nice kind of lift happening here, I think. And again, when we introduced, it was 30 cents. It doubled within less than a month. But let's talk about the path to get there. What needs to happen? I highly suggest you watch the video, the interview we had with Matt, the CEO of the company, and we talked about this company has really multiple paths. That's what I like about it. There's multiple paths to get to that 10-bagger. Before we even touch on that, let's talk about the risk reward setup. The main thing that we look for in these 10-baggers, 100-baggers, the first thing you want to look at is, I like asymmetric setups. Asymmetric. So your risk is, maybe a few cents, and your upside could be $5. And in the case of Organic Garage, I think the downside is, at this point, like where it is right now, is like, I can't believe it's more than a nickel. It is definitely, I don't think it's going to 30 cents. I think your downside is literally could be a couple of pennies right here. Not only based on the chart, but also based on the fundamentals. You got to realize this company right now, the market cap is only $25 million. Think like Warren Buffett. How would Warren Buffett analyze this? Warren Buffett would look at this. Okay, I'm buying a nice business here. They got 4 stores. They're about to scale to, they might go to 8, 10 stores this year. Plus they got the plant-based. We'll talk about that in a second. But okay, you got a great brand, you got a strong, really strong brand and an opportunity to scale. How much would a private equity firm, how much would they pay for this business right now? These guys are doing 30 million revenues, right? I think they're cash flow positive, right? I mean, they got accounting stuff. If this was operated as a private company, they'd be throwing off substantial cash flow. Would they sell for 1 times revenues privately? I believe they would. I know the multiples are something like 2 to 4x in the private market. I know there's been some deals, some comps, maybe even 5x. So really, this thing should be selling for minimum of 50 million market cap, minimum. So really, it should be $1, but you're getting it right now. You're stealing. I mean, you're literally stealing this thing for 30 million. So you're stealing it right here at these prices at 45 cents, 50 cents. You're stealing this thing. Okay, so the downside is limited. So we've de-risked it. Again, there's minimal downside. Again, any stock can go to zero. Absolutely, anything can go to absolute zero. It's very possible we can get hit by an asteroid. But realistically, your downside, the chart shows you that we've bounced off the moving average. So the downside is really like de-risked. As a private company, let's say these guys went private. I mean, somebody bought them out here, which is not going to happen. You know, how much would they pay? They'd probably pay, I would say, probably 1.5, 2 times the revenue. So $50 million. That gives you $1 a share, basically, right? So they have 50 million shares outstanding. So this thing is worth fundamentally $1 a share minimum, right? As a private company. If you want to do a Warren Buffett analysis, you want to do a private equity analysis, it's worth $1 a share. So, okay, so let's say, even if I'm completely wrong, let's say it's worth 50 cents. You have no downside, basically. So we've eliminated the downside. So the asymmetric. Now, let's talk about the upside. By the way, the smart money, the way you got to think of these things is, okay, you want a situation where you have no risk and the upside takes care of itself. That's your Warren Buffett, your massive upside setup. Okay, so what needs to happen for this thing to be $5? For this thing to be $5, that would imply a $250 million valuation, right? Okay, what needs to happen? A couple of paths. There's 3 paths to get to there. Path number 1 is, they just have the stores, they start scaling up, they go from 30 million, let's say they open, I don't know, let's call it 6 more stores in the next, 12 months. Now they have, 10 stores in total. They're doing, let's call it 8 million a store. So they're doing 80 million, and you do 3 times multiple, because that's what the market would pay. The market would pay 3 times revenues for a specialty retailer that's got velocity, that's got growth. Because look, the idea is, a private equity firm would buy these guys, right? They would take that whole business model and they would scale it, globally, okay? Just like Ray Kroc did with McDonald's. I'm using that as an example. Ray Kroc bought McDonald's. It was a couple of locations that had a phenomenal business model, and the guy paid a fortune. At that time, it was like people thought the guy was crazy. Watch the movie The Founder. Great movie, The Founder. Look this up. The phenomenal movie. I think Matt is like a Ray Kroc type of guy. I mean, really exactly like a Ray Kroc type of guy, and he's going to scale it. So if they just go to 10 stores, 80 million revenues, 3 times, so you're talking about 250 million. So in the market, again, the market is forward-looking. So that 250 million valuation, that $5 stock price, it's not going to happen when they have 10 stores. You know how the penny stocks work. It's going to happen when they announce the next couple of stores, so the stock pops to $5. And by the time they get to 250 million, the stock drops back down, then goes back up. So just like we saw with every one of these stocks that you see at the bottom of the screen, all these 10 baggers, 50 baggers. Again, you guys have seen this movie before. We've already had 9 stocks we've brought you in the last 18 months that are up between 1,000%, 5,000%. And every time we bring on these new companies, whether it's a CBDT, whether it's an ESC or FANS, whatever it is, Imagine AR, CYDY, visibility, nobody thought that this would have happened. And sure enough, the same thing happens. The same thing is going to happen over here, I believe. Let me do a quick disclaimer, of course. Oh, before I forget the disclaimer, I know this is very important. Let me run that disclaimer. Not a recommendation to buy or sell. These stocks can go to zero. We're getting paid by these companies. So the opinion that we have here on this, completely biased. Click the link for the disclaimer if you want to know how much we're getting paid. I know that's a big, people really want to know, like, wow, how much is this guy making? The answer is not enough. Okay. So basically, path number 1 is if they just do the stores. Okay, path number 2. What is path number 2? And this is the sexier, this is what everybody wants to know. The plant-based, the CPG brands, okay? Future of Cheese, Future of Butter. This is their plant-based food line that they just launched. Watch the video with Matt. He talks about it today. They're starting to scale. They're going to have 10 products, 10 SKUs, probably in the next 6 months. They went from 0 to 3. They're going to go to 10. And I can talk all day about the possibilities. And we talk about like Oatly. You see what's going on with Oatly. Oatly is, massive, multi-billion-dollar valuation now. They got 700 million revenues. And what do they sell? They sell oat milk. Oat milk. I don't even know what that is. I would never even drink that. I mean, I don't even. By the way, I'm not a consumer for plant-based. I like the actual thing. Red meat. All that stuff. That's not healthy for you. Yeah. So basically, they get to 10 SKUs. At that point, they're going to have a portfolio of products, which, that's what, national chains want. They don't want you to come in with one product. They want to see 5, 10 SKUs, right? And we had Yossi on 2 weeks ago. The guy's the marketing genius. He's scaled up massive brands nationally, taking companies just like this, just like Organic Garage, Future of Cheese, scaled them from, into the 100 million range. He worked with Danone, yogurt. The guy knows what he's doing, right? So they got a plan basically to go national. Now, Matt went through all the numbers, exactly what needs to happen for them to go to 500 locations. I think he said, if I recall, once they're in 500 locations, and that's nothing, by the way, they would be doing, 8 to 10 million revenues with 500 locations. And again, the guy's a conservative guy. So with some CEOs, you got to discount everything they say by 50, 70%. With Matt, in my opinion, you basically have to double whatever he says, just double it. That's going to be the number, because he's a very conservative guy. So let's say you get to 1,000 locations. So that would give you 20 million revenues. Okay, what is the market paying for plant-based stuff right now? The market's paying 10x. So that's your next 200 million, 250 million. I'm going to give it a little extra. Okay, so and by the way, that's the 200. That's not even counting the retail store business, right? So path number 2, if they only get into 1,000 stores in the next a year, and 1,000 stores is nothing. In Canada, they got like billions of these stores. By contrast, how many stores is Oatly in? Oatly is in, I think, 65,000. Oatly is in 65,000 stores. And that happened very quickly. I mean, nobody heard of Oatly up until recently. All of a sudden, they're in 65,000 stores. Plus, like food service, like restaurants, whatever, another 60-something thousand. So the point is, they can easily get into 1,000 stores, and that'll get them to, let's say, 20 million revenues times X, 250 million valuation, $5 a share, okay? So we talked about 2 paths. Path number 3 is, let's say there's a combination of the 2, okay? And let's say we reduce it a little bit. So let's say, they get to, they go to 8 stores. So they're doing, I don't know, let's call it 65, 70 million, right? So they do 70 million with the stores. And they do only 10 million with the plant-based. So you got 80 million. And let's say the market only says, okay, we'll give it a combined value of 3x. There's your 250 million. So that's $5 per share. $5. I gave you 3 paths to get to $5 a share. It's very easy. Listen, guys, I'm a very conservative guy. I like things where the downside is limited. I like that model where you're getting into something, you have no downside, and the upside takes care of itself. I'll give you an example, crazy example. So I was in a sushi restaurant, I don't know, some years back. I'm sitting in a sushi restaurant, and a guy is sitting next to me, and we start talking. I ask him, what do you do? He says, I'm in the real estate business. We do like real estate, like, big time. He was actually the brother. I think he was a brother of a guy. I don't want to use the guy's name, but he was a multi-billionaire. The guy was one of the Forbes 400 guys back when $1 billion was real money. Now there's like, kids running around billionaires. But This is about 10 years ago. This guy was, I don't know what this guy, but his brother was, multi-billionaire. And he said his formula was very simple. They would buy real estate. At the time, this is probably 2008, 2006, maybe. It's going back a long time. They were buying real estate, Midwest or whatever it is, below replacement value. So let's say it costs $100 a foot to build a building. They were buying stuff for like $50 a square foot or whatever it is. And so the downside is, limited because it costs $100 a foot at that time to build that type of building. And, they're making money in the rent and they hope things take. So like a couple of years later, I remember during the real estate crash in Vegas, I bought some real estate, not enough in Las Vegas at $50 a square foot, $50 a square foot. Unfortunately, I didn't have enough money to buy as much as I should have. Okay, so $50 a square foot, the replacement value would cost $100 at least to build, right? There was a lot of foreclosures going on, and everybody was saying, oh, this is crazy. Things are going to go to zero. It's not going to go to zero. People need a place to live. They need a place to work. Okay. So now, of course, you got rental income, and now prices in that market, I think they're a little bit inflated. They're like 200 in that neighborhood, $250 even a square foot. So you get 5X in, it took a couple of years. It took, 8 years. But that's real estate. It's a slow moving thing. But the point is this, you're getting into something below replacement value. The upside takes care of itself. That's the whole principle. I'm not here to tell you about real estate. I'm here to tell you the same principle applies to stocks. Organic Garage, if you look at it as a Warren Buffett, as a private guy, you're buying it below replacement value, basically below private equity value. And the upside takes care of itself. So it's de-risked. So I gave you 3 ways where, the stock has that path to $5. I suggest you do your own due diligence, as they say. Check out the video with Matt, the CEO, that we did today. The live stream is incredible. He talks about the plant-based business, how they're going to scale it. It's the threshold, it's a very low bar, very, very low bar. I think it's going to be very, very easy for them to exceed whatever the guy's talking about, because he's a very conservative guy. Whatever he says, just double it. Okay. that's the way you gotta look at what he's talking about. So back to the chart. Let me just take a look at this chart. I think this is an amazing chart. This is the 1-day chart. Let's take a look at the 1-week chart. Yeah, there you go. What's going on here? So yeah, so we're above. Do we break it above? I think we're above the moving average now. This is the long-term moving average. So we're peaking above it. And I think once the stock closes 55 cents, that's like a magic number. Once it goes 55 cents, it's going to be game on again, and people are going to go crazy for this. Okay, here's closing day action. This is the short term for all you degenerate day traders. If you want to know what the stock is going to do tomorrow, I think this thing is heading up. Now, again, you got headwinds coming in. You got the Dow, NASDAQ looks very, very weak. The Dow and NASDAQ looks like they're going to completely collapse. But this thing is, the chart tells you what's going to happen. You get this upside reversal, breakout above the moving average, closing way above the moving average. So let's take a look for a 15-minute chart for even shorter. So yeah, you had a really nice breakout today above that moving average. And I think this thing wants to go higher. You almost have like a head and shoulders bottom here. You can easily see this thing closing above 55 cents. Yeah, 57, 55, that's the range. Once it gets above that range, you're going to see the next stop, in my opinion, is going to be $1 plus. Okay, I'll get to some audience questions in a little bit. Yeah, the float, the very tight float. Yeah, so here's the thing. One of the big things that's I believe that's been hanging over this stock has been this perception that they're going to do financing. There's no financing. He said there's no financing happening here. I don't think there's anything under $1.50 that's going to be happening. So especially when this thing starts moving, they're not going to do a financing. So you got, for those of you with a short-term mentality, I think you have a very clear runway to $1.50 right now. There might be a financing at that point. I wouldn't blame them if they did a financing at $1.50, maybe $2. And then the stock is probably going to consolidate for a little bit. And after that, once it consolidates from there, that's going to be your break at the $5. So you got a choice. You can either get in now, or you can get in at $1.50, whatever you want to do. It's up to you. So ESE Entertainment. Julian, great that you bring this up. Okay, that is our number 2 stock we are going to be looking at right now. ESE. Wow, look at this 15-minute chart here. Wow, it's looking great. Let's look at the 1-day chart. Okay, amazing. Should I do the candles for those of you who like the candle? I'll show you the candle. Yeah, so this, yeah, actually I don't like this. This is kind of a weird little day. Today's action in the stock, again, I don't understand it. It's like, it's like they're giving this company away. It's also it's like a de-risk type of deal. Listen, let's talk about the asymmetrical setup here. Let's talk about the asymmetrical setup. One step at a time, Julian. Let's just get to $10 on the TSX on the over the counter. If it gets to $10, everybody's going to be very happy, and then the other stuff can happen later. So just for reference, ESC, we introduced this last year, exactly a year ago, 12 months ago. Literally, I think it was like December 5th. The stock was 30 cents. It ran to over $4. Was it $4.50? Looks like, right? $4.50. So that stock went up 15x in 4 months. Again, the market is forward looking. So when they came on the program, they had less than $1 million in revenues. And Conrad said in January, 11 months, a year ago, he said, look, my goal is to get to 100 million revenues, $1 billion valuation. I want to build $1 billion company. That's what he said. Very important to have an ambitious CEO that can execute. This guy is doing it. And the crazy thing is the market got ahead of itself, $4. The stock wasn't worth $4.50 then. It was overpriced. A bunch of stocks got, ran ahead. And sure enough, it pulls back. Again, the same thing is going to happen with Organic Garage. Organic Garage is going to get way ahead of itself. It's going to go to $5 very quickly. Then it's going to pull back to like $1.50. And, that's going to be the time to get in for a move to potentially $10. I think it can go to $10, $12, even $20 if you're willing to wait like 2 years, 3 years maybe. So ESE, today's news is amazing. Today's news was transformative, game changer news. And the market was like, I'm shocked, like nobody was paying attention. They just announced, okay, so let's bring things up to speed. He said he was going to do 100 million. So he went from basically a million. He went from $1 million run rate, under $1 million run rate, to 50 million as of a couple of weeks ago. That's pretty good, right? Now, with today's deal, they're buying a company that's doing 24 million revenues, right? 24 million. And they have income of almost $5 million. Now, of course, it's Canadian dollar, so it's like not even real money, but the stock is trading in Canadian, right? So at this point, they're at, I don't know, is it 55, 60 million plus with acquisitions? And this is a phenomenal, I believe the synergies in this thing are going to be phenomenal. It's a marketing business in the esports space. Potentially they could take that same skill set and apply it to the gaming, the sports betting, iGaming business. So all of a sudden you got that sports betting upside here. Now, ESE is not doing video games. They're not developing video games. They're not doing some betting. All they're doing is enabling. They're a technology enabler, essentially. Very, very smart. They're doing the picks and shovels. So that's the business that they're in. Great business model. And essentially, Conrad has been able to do these deals. I mean, he's like, this guy's like the Barry Diller of esports. I mean, if you look at what happened with IAC, I suggest you look up IAC. You know what? I'll look up IAC for you because it's interactive. IAC. 1 week chart. So Barry Diller, a legend on Wall Street, legend in Hollywood. I mean, this guy is a fucking legend. So this is the IAC chart going back to when did they get? So I mean, there's been splits, all that splits, yeah. So this was like let's just say it was a $5 stock, $1 stock, 1999. It was $1 stock. Now the splits, yeah, the split adjusted, blah blah blah. Okay, so this went up to let's $180. So it's a 180 bagger. And from but the real action started happening over here, like 2016. So basically, the stock went up 15x from here. All M&A in the internet space. So what Conrad is doing in esports, Barry Diller was doing in internet brands. Same thing. I mean, this guy Conrad, I think, is going to be one of the great CEOs of our age. But of course, it's going to happen much faster. You've already seen how fast it can happen, right? You've already seen how fast it happens. It's not going to take 20 years. This already went up 15x in a couple of months. It's going to happen again. Okay, so right now, the stock is trading at $1.63. With today's deal, let's talk about the path. Before I talk about the fundamentals and the path to get to, $10 plus, $12. Before I get to $12, let's look at the chart. So I'm showing you the weekly chart. Again, this is a brand new stock. It's only been around less than a year. So this weekly is not enough information, but you can see the breakout happening. You see this, it's like a rocket taking off. Like you kind of have a head and shoulders bottom happening here, a pennant. The stock broke out above the weekly 50-day moving average, which was around $1.60. So we broke out above that. And I think you get an easy path to $4 here. Now you got the 1-day chart, same thing happening. Today was a weird day. I mean, the stock should have gone literally today. I was expecting the stock to go to $2. The fact that it didn't, I don't get it. You get a weird day happening. You got some weird days in the markets right now. But let's talk about the fundamentals. So the chart looks really, really good right now. Let me bring this into perspective here. So yeah. Again, this kind of reminds me of PKK. PKK looked very similar, and that stock went up, it was a 20 bagger. We introduced peak at 35 cents pre-split. It went to $14 post-split, so $7 pre-split. So basically, it was a 20x. If you got into PKK when we first introduced it last September 2020, you would have been up 20x. If you put in 10 grand, you would have had 200 grand at the peak. And by the way, I did tell you, hey, after, when our deal with them was up, the stock already looked, the momentum was gone. I think the glory days for peak are behind it at this point. They got to catch up. The fundamentals have to catch up. It might be a good buy coming up maybe in 6 months. But right now, that one is, we've seen the best days, just like CBDT. That was our 50 bagger. Again, I'm talking about strictly based on chart price action, nothing to do with fundamentals, anything like that. I'm talking about purely based on the stock. ESC purely based on the stock, easy path to $4 plus. And if it breaks out of $4, it's going to $12, I believe. And again, we're seeing exactly the same setup that I was telling you about with peak. PKK. Same thing. You're watching you're watching a replay of the PKK story. Okay, now that we got the charts out of the way, let's talk about the fundamentals. By the way, I highly suggest you join our Telegram channel. The link is in the video description below. Click the link. I mean, we got a lot of valuable stuff on that Telegram channel. I am shocked that you know, we don't have 100,000 people on that channel already. By the way, we have a new merchandise store. So if you want to get a t-shirt or a mug, click the link and let me know how it turns out, and take a picture of yourself, post it on Twitter or whatever. I don't even know what the stuff looks like. It's coming from a company called Teespring. So I don't even have my own mug or t-shirt. I have to pay for it myself and see what it looks like. I hope it's good quality. If it's not, I definitely return to them. I'm not making any money on this. I'm not getting rich off of this merchandise. I'm getting like $1.50, and I know the prices are very high. I think it's a complete ripoff, to be honest with these people. But that's, you know, if you want a mug that says Penny Stock Billionaire Gang on it, you'll probably become a billionaire if you drink from that coffee mug. And if you wear the t-shirt, definitely you'll become a billionaire. Money not back guaranteed. So, okay, let's talk about the fundamentals. What is the path for ESE to go 10x? Okay, they got 100 million shares outstanding after this deal, right? Give or take a little bit. The stock is trading at what is it? $1.60. So you got $163 million valuation. What is the market paying for companies that are doing 60 million in the esports space? 10x or more. So right now, this thing should be trading at 4 times higher than it is right now. 4 times. If you do 4 times, that means it's about $6-7. Did I do the math correctly? I think it's $6, right? So right now, this thing should be trading at $6. Why isn't it? Look, we had a market, we had a rough market, a couple months. Esports may have been out of favor or whatever. You know, you had the Draft Kings, the EGLXs of the world got hit. By the way, ESE is it's like the flip side of EGLX. If you like EGLX, these guys are the flip side. So EGLX basically is doing a roll-up of media properties, and ESE is doing a roll-up of infrastructure, the picks and shovels, the stuff that drives esports. So take a look at what happened here. Yeah, so EGLX went from like $1 to $9. You know, I actually wanted to get them on as a client, and for some reason, we just couldn't connect. They had a different CEO. There's some weird stuff going on there, but yeah, I mean, you guys basically missed out. We could have had EGLX, but you know, whatever. Actually, ESE did much better. So EGLX only went up 8x. ESE went up 15x plus. As you can see, EGLX is a little bit weak, so maybe some of the players are probably thinking that they're painting ESE with the same brush. I don't know, but anyway, this thing should be trading at 10x revenues, 600 million market cap, which would imply a $6-7 valuation. $6-7 valuation, right? So, what needs to happen for this thing to be $15? Good question. Now, let's say Conrad gets to $100 million revenues. He's already delivering. The guy's delivering everything he said. He's already at 60 million now. Is he going to get to 100 million by the end of the year? Probably not. Now, the caveat: he did say that 100 million target. I think he announced that last January. So technically, he's got 2 months to deliver another 40 million. So I think he's got a shot of that. If they get to 100 million, this thing is worth 10x. That's $1 billion. $1 billion. $1 billion. Divide by 100 million. $10 a share. They're probably gonna have more shares at, but look, you're talking about roughly $10. Now today, again, the 100 million, that's a placeholder. That's not the ultimate end goal. That was, he said, hey, my goal for the year is to get to 100 million revenues. By the way, they also have organic growth. And with this new company, this, what is it, Game Addict, it's going to turbocharge everything they're doing. I mean, you got that digital motorsports, you got, what do you call it? You got the Game Addict thing. You got, what else? They got the other stuff they're doing. So you're going to have this thing on turbochargers. So can they get to, 250 million? Why not? By the way, today he said the next milestone his next milestone is $250 million. Excuse me, $250 million valuation. $250 million revenues. His next goal is to get to 250 million revenues. That would imply a $2.5 billion valuation. The 250 million, it's probably going to take him another year to get there. So by next year, this thing should be worth $2 billion plus. That would be $20 or $25 based on where it is now. Of course, they're going to have a lot more shares out. They're going to have, they're going to be paying for acquisitions. They're probably going to do a financing at some point. It's not going to happen now, and that he was very adamant about that. And I think what's been going on with ESC and OG is you have short sellers coming in who think that these companies will be doing a financing. And the way these guys work is they short the stock and they try to cover through the private placement, through the financing round, and they clip a warrant, whatever it is. And, it's a good business for these guys. This is not going to happen with ESC or Organic Garage. They're not doing a financing here. Would ESC do a financing at $4, $5? Probably so. But I think the coast is clear between here and $4. You got a clear shot. So you got between here and $4. I think you get a clear shot. So what needs to happen for this thing to be a 10x from here? That's a $16 price, right? Very simple. I think if he gets to 150 million revenues in esports, which probably, look, if you extrapolate from what they're doing right now at the current pace, add in some organic growth, it's probably going to happen by July, June, July of next year. That's, what is that? That's 8 months roughly, right? So it's going to take about 8 months to get to the next 10x, which is, $15, $16. It's not going to happen overnight. This thing is not going to go to $16 overnight. It's going to take 8 months, which is about, I think, if he gets to the 150 million revenues, he's probably going to get all that stuff by July. So he's already done it. Again, we're not like throwing out fantasy numbers. This is not like some, bullshit that you see, with penny stock guys, making projections. No. Here is a guy that went from $1 million, less than $1 million, to, I don't know, $50, $60 million in 11 months. So if he did it before, past is prelude, right? Is that the word? Past is whatever it is. The past is is a very good guide to the future. The guy's a very focused guy. He's got a goal in mind. And I am certain the guy's going to deliver. So By the way, it's a lot harder to go from $1 million revenues to $50 million than it is to go from 50 to 150. Much harder. At this point, once you get to that 60 million, 75, 80 million, you start attracting a whole new caliber of acquisitions. Things become easy. It's that first 100 million that's hard. After that, it's like, that's how, that's how people become billionaires, right? The first million is hard. The next 10 million is hard. But once you break out of that 100 million, then, that's what happens. Yeah, same thing with the stock. The first, to go from 30 cents to $1 is hard. From there to $10 is easy. Bottom line, I just laid out the path for you. What needs to happen for ESE to go to $16 per share? I think that's going to happen by July, once they get to that 150 million plus revenue run rate in the esports business. Of course, anything can happen. The stock can go to zero. Very possible. We could get hit by meteor, asteroid, climate change, pandemics, all that other good stuff. But yeah, all else being equal, here's a guy. I mean, here's the bet that you have to make. Here's how you got to analyze this. If a guy went from 1 million to 60 million in a year, right? He went up 60x in a year. Do you think it's possible that he can go 3x the next year? I think it's possible. Is he going to go 60x? I don't think it's going to happen. He's not going to go to 60 times 60 million. That's what is that, 30 billion or whatever it is? That's not going to happen in the next couple of years. But I do believe he can go to 150 million. And he did say 250 million is the next target. So there's your path. I mean, this could be a, $12, $15 stock very quickly. It's going to be very good. Yes. So we're only talking about 2 stocks right now. We're focusing on just these 2 guys, which I think are going to be big winners. But yeah, don't put all your money into one stock. You want to be spread out with at least, I would say, 10, 12 stocks minimum, because you never know what can happen, right? Yeah, okay. So by the way, again, click the links below if you want to join our Telegram channel. We're on TikTok, Twitter. We also got, what else we got? We got merch. We got merch. If you want to get mugs, t-shirts, we got the link right there below. We got for guys and girls, we got the hoodie. Melinda, I assume the female. Melinda, we got the crop top hoodie. Melinda, get that hoodie. I hope you're hot, right? Take a picture of yourself in that hoodie, post it on Twitter, and then we can talk about any of these stocks, right? There you go. So yeah, I really hope that we get a lot of like hot girls who are going to be buying these t-shirts and taking pictures of themselves, and also drinking the penny stock billionaire coffee mug. That will be phenomenal. I think that's going to be very, very beneficial for these stocks. Very beneficial. Okay, to wrap up, I just talked about Organic Garage, ESE Entertainment. Both of these stocks, I clearly outlined to you how they have a path to be a 10-bagger. And look, I'm not talking out of my ass. I'm talking from experience. In the last 18 months, we've had 9 stocks that have increased between 1,000 and 5,000%. You can see them below. And a whole bunch of other doubles, triples, 5Xs, a whole bunch of those. So, yeah, I think ESE and Organic Garage are basically it's the sequel. You're watching the sequel to the movie. This is like, what's that movie that they keep making like 10 versions of, the car racing one? What's the one? What's that car racing movie that they've had already 7 different sequels? With I think The Rock is in it, or one of those guys. This is the same thing. I mean, we're just creating sequels of 10 baggers. Where is the merch? Okay, so if you got to be on our YouTube. Oh, it's only on the Wall Street Reporter channel. It's not on the Penny Stock Billionaire Gang channel. Yeah, you got to go on the Wall Street Reporter 1843 on YouTube. That has it. That's the one, the Fast and Furious. I mean, they must have made 20 of these Fast and Furious movies, or I don't know how many they're up to. And we're doing the same thing with penny stocks. We just keep churning out these 10 baggers. They all follow the same formula. It's a formula. It's a Hollywood formula. So I know what the formula is for a stock to be a 10 bagger. Okay, it's a very simple formula. I talked about it a million times. The company has to have 3 things going for them. You got multi-billion-dollar market opportunity, multiple catalysts, key inflection point, and news flow, weekly news flow. Okay. And a CEO that gets it, a guy who's going to be promoting, a guy who's going to be coming on our program. Any company that follows that has become a 10 bagger. Every single one. We've never had a failure. The only time there was a failure when a guy just showed up one time, then they disappeared. So ESC, Organic Garage, they're following the formula. I mean, they're doing exactly what 10 baggers do. And ESC's already was a 15 bagger. It's going to do it again. Oh, and here's the thing for investors. The main thing you want to look for is asymmetrical setups. I don't like chasing stocks. I don't think you should be chasing stocks. I highly recommend you do not chase stocks. I highly recommend you get into stocks when nobody wants them, when everybody hates them, when everybody doubts them, when they're at the bottom, just like ESC and Organic Garage are, when they're de-risked. So right now, I explained to you already how and why these stocks have minimal downside right here. They just can't get any low. I mean, of course, again, the asteroid can happen and everything can go to zero, but then we'll have other problems at that point, right? You're not going to be worried about penny stocks. So again, you have the asymmetric setup. You got that asymmetrical setup. Your risk is a couple pennies. Your upside is $5 plus. So if you risk a nickel to make $5, I think that's a good bet. By the way, I didn't invent this. It's a winning formula. If you want a detailed explanation, an academic explanation, I highly recommend you read the Black Swan book. Nassim Taleb, my man Nassim Taleb. Check out the Black Swan. Well, he talks about this. That's what he looks for. He looks for asymmetrical setups where you got this, 100 to 1 upside. And that's what you're getting with these 2 stocks. That is the deal. There we go. Where do I see ESC by end of year? That's 30 days. I don't know. I think I do. I'm very confident that ESC is going to blow out of $4. I think it's going to break out of that range. It could take a few months. I mean, I thought it would happen already, and it's taking longer. Again, with PKK, Peak FinTech, I thought that breakout would happen much quicker, and it took 3-4 months longer than I was expecting. So, it took a couple of months longer. But again, stocks climbed a wall of worry and a wall of doubters and haters. They climb up and trample those doubters and haters. ESC and Organic Garage are going to climb over and trample and stomp on all the haters and doubters. When these stocks are trading at $5 a piece each, you're going to look back on this video and say, thank you. And then you're going to buy the merch. If anybody makes money on these 2 stocks, I need you to buy this merchandise so I can make that 10% commission, $1.25 on the coffee mug. That would really help out. Every penny counts. But I think ESC is probably. Let's see what happens. It should be right now, legitimately, this thing should be trading at $6 right now. Again, it should be trading at 10x the esports revenues, which is right now 60 million run rate. So I think we got a shot at $3. $3, depending how the market behaves, maybe close to $4 by end of year. Let's see what happens. But I think in the new year, by February, March, I think we'll break out of the $4 range. So, it might take a little bit longer, but yeah, both of these stocks are 10 baggers. Yeah, again, this is science, man. Follow the science, just like Dr. Fauci and Joe Biden say, follow the science. These charts are science. I gave you the scientific explanation here. You got to follow the science. Don't be a denier. Do not deny the science. Don't be a climate change or a COVID denier. Don't be like one of those guys. You got to follow the science. These charts are science. And I expect to get a Nobel Prize at some point. It might take me 10 years, but I do expect to get a Nobel Prize on top of my Order of Canada that I already have. So I do expect a Nobel Prize. And if anybody is watching, anybody on the committee, the Nobel nominating committee, when you guys make 10x, 100x on these stocks, I do expect to be getting that call at midnight, when you call people up at midnight and say, hey, congratulations, sir. We're flying you out to Oslo. I think it's Oslo, right? Or where is it? Stockholm. I'm going to be on that flight to Stockholm to pick up that prize. And I promise, if I do get the prize and the $1 million, they give you $1 million cash, I will donate the $1 million to charity. I'll even donate it to Greta Thunberg for the climate change, some sort of climate thing, earth warming, whatever it is, I will do that. It's a promise as long as I win that Nobel Prize. Thank you very much, and I will see you in the next live stream. Again, these stocks, I think, are going to be the massive, huge winners in the coming weeks and months. Do your research and decide for yourself. Thank you.